Welcome to the deep dive. Today we're taking a look at the cryptocurrency market. It showed some surprising, bounce back in early 2023.
Yeah,
If you remember, after the whole FTX collapse, there was this real sense of uncertainty, wasn't there?
definitely. A lot of nervousness.
But then, boom, we saw both Bitcoin and Ethereum rally. Bitcoin actually surged, over 30%, broke above $20,000 in January that year?
Right, and Ethereum wasn't far behind, climbing over $1,500. It
Yeah.
really caught some people off guard.
It makes you wonder what was behind that resilience.
Well, what's interesting about that time is the context. It wasn't just a straightforward surge in like a bull market.
Right.
You had this upward movement happening, but there were all these conflicting signals flying around.
Like what?
Well, on one hand, you had some optimism, maybe about energy prices stabilizing, possibly the Fed easing up a bit on rates.
Okay.
But at the same time, global tensions were still pretty high, and regulators were really starting to look closely at crypto companies, concerns about money laundering, things like that.
So a really complex picture.
Exactly. It was a strange environment for that kind of growth.
Yeah, and that's why we wanted to take a closer look today. We're not just, interested in the price movements themselves. We want to understand what's driving the underlying trends. And today we're focusing on one specific project that's trying to navigate all this complexity.
Our focus today is Ultima. Now, their mission, based on their white paper from late 2022 into early 2023, it's pretty ambitious.
Go on.
They want to establish Ultima as a widely adopted global cryptocurrency and build an accessible ecosystem around it, specifically designed for everyday payments.
Okay, so not just another digital coin.
No, they're really positioning themselves as a solution to some of the fundamental problems we see in crypto, trying to create and lead their own market space.
And our main source for this is their white paper.
That's right. It gives a pretty detailed look at their analysis, their mission, technology, plans. So maybe let's dig back into that early 2023 recovery first. Beyond just Bitcoin and Ethereum, what else was happening?
Okay, let's unpack this. What does the white paper say?
Well, it confirms that the positive vibe in January 2023 wasn't just isolated, it was broader, affecting quite a few other digital assets too.
Right.
And it points to a few potential reasons coming together. The easing energy crisis, giving some economic stability,
Okay, that makes sense.
and maybe the fact that there wasn't another huge negative story right after FTX. That might have calmed nerves a bit.
A kind of no news is good news situation.
Sort of.
Yeah.
Plus, there was definitely speculation swirling that the U.S. Federal Reserve might, take its foot off the gas with interest rate hikes.
So almost like a collective sigh of relief. But you mentioned Edwin's earlier. It wasn't all clear skies, was it?
Precisely. The white paper makes it clear that ongoing geopolitical instability and that increasing regulatory heat were still major factors, real potential limits on growth.
Right.
What's also quite interesting is they mention a pretty significant outflow of Bitcoin right at the start of January 2023.
An outflow before a price rise.
Yeah, and historically, sometimes these large outflows where big amounts leave exchanges have actually preceded price increases. It suggests that maybe some major players, the whales, were making strategic moves, repositioning their assets perhaps, which then influenced the price later.
Ah, okay. And this is where it gets really interesting for me. The link between crypto and, the regular stock market, tech stocks specifically.
Yes, the white paper really points that out. That interdependence, that correlation had become much more noticeable.
So tech stocks doing okay helped crypto.
It likely contributed, yeah. When big tech valuations stabilized a bit, it probably boosted sentiment in crypto too. And another thing, venture capital.
Still flowing in.
Yes, maybe cautiously, but it's still coming into crypto startups. That's always a sign of some underlying optimism, right? People investing in development, believing in future growth.
It definitely sounds like a cautious shift, but a shift towards, a more positive outlook. But the white paper doesn't just paint a rosy picture, does it? It includes a pretty stark warning, too.
Oh, absolutely. They mentioned the BONK coin situation.
Right, I remember that.
It lost, 100% of its value in a single day? A complete collapse.
Wow.
It's a really powerful reminder of how incredibly speculative and frankly volatile many of these alternative coins can be. Even when the main market seems okay, you got to be careful. Really underscores the risk.
Okay, so that's the market snapshot. Now let's pivot a bit. Why would anyone actually want to use these sometimes, wild assets for just buying stuff? The white paper gets into the advantages of crypto as a payment method.
Yeah, and what's fascinating is how it's moving beyond just being an investment. The white paper highlights this growing acceptance in institutions, companies, even like individual freelancers starting to accept crypto for goods and services.
And they mention El Salvador.
They do. That was a huge step back in 2021, recognizing Bitcoin as actual legal tender. And the white paper notes other countries were kicking around similar ideas.
It's pretty groundbreaking, really. So according to the white paper, what are the core benefits driving this? Why use crypto for payments?
Okay, it lays out a few key things. One, independence, cutting out the traditional banks or payment processors.
Right.
Two, guaranteed control. Your funds are your funds. Three, global reach. Send money anywhere, anytime. Four, that element of anonymity or pseudonymity, perhaps. And five, lower costs, generally speaking.
Let's pause on that anonymity point. It's often misunderstood, isn't it? People think it's totally untraceable.
That's a really crucial distinction. The white paper acknowledges the perception of anonymity, but it stresses that transactions are on a public ledger. They are traceable.
So not invisible then?
No.
Huh.
But making it difficult to link a specific transaction back to a real-world identity de-anonymization that gets much harder if users are careful. Like if they avoid linking their crypto activities directly to their bank accounts or credit cards.
Okay, so it's more about separating digital and traditional financial footprints. What about the costs? You mentioned lower fees.
Yeah, generally, crypto payments avoid some of the taxes you see in traditional finance. And the fees you pay to the network, the miners or validators who process things, are often lower than, say, credit card fees or international bank transfer fees, especially for sending money across borders. It cuts out those middlemen.
That sounds attractive, definitely for international stuff. The white paper also brings up financial freedom in other ways, like lending and borrowing.
Exactly. Because it's decentralized, people can lend or borrow directly from each other. This is often done using smart contracts, basically automated agreements on the blockchain or through decentralized platforms.
And the benefit there.
Potentially more flexible terms, maybe lower interest rates than you'd get from a bank. Could be really helpful for entrepreneurs, for instance.
And it's not just business. The white paper talks about broader uses, like charity, or helping in places without good banking access.
For sure. It gives examples like parts of Africa or Cuba where there are restrictions. Crypto can offer a vital alternative pathway for payments and trade in those situations.
But we need to keep it in perspective, right? It's not like everyone's buying coffee with Bitcoin yet.
Not at all. The white paper is clear that using crypto for everyday shopping is still pretty niche. They estimate over 90% of Bitcoin transactions are still speculative, not for actual payments.
Right. So potential, yes. Widespread reality, not yet. And there's the elephant in the room, security, fraud, hacks. The white paper addresses that.
Oh yeah, it's a major focus. The sheer amount of fraudulent activity is a huge hurdle.
And where does the blame lie?
Often, unfortunately, it's down to user error, according to the paper. Things like weak passwords, falling for phishing scams, those fake emails or websites trying to steal your details.
Scary stuff.
It really is. They cite a figure from Chainalysis, $1.9 billion stolen in just the first half of 2022. That's staggering.
Wow. But interestingly, the white paper also mentions a decline in investment in traditional payment systems around the same time.
Yeah, perhaps suggesting some growing dissatisfaction with the old ways, maybe. Even with their established security, they have their own issues.
And speaking of old ways, business payments, B2B. The white paper suggests that's an area ripe for disruption.
Absolutely. Think about the U.S. B2B market. It's massive, like $29 trillion a year.
Yeah.
And apparently almost half of those payments are still done with paper checks.
Checks. Serious.
Checks. So there's this huge opportunity for digital assets to offer faster, cheaper, more secure solutions there.
It really feels like something's got to give. The white paper even throws in that quote from Arthur Hayes.
Right, about crypto being the best asset during instability because it's independent from government control.
Yeah.
That really gets to the heart of the appeal for some people.
That idea of financial sovereignty.
Exactly. It's a core part of the whole crypto philosophy.
Okay, so market picture, payment potential. Let's look at where things might be heading. Market development trends. What does the white paper highlight there?
One of the biggest shifts they point to is the role of institutional investors. Big money. They argue that the recent crypto winter wasn't quite like the previous ones, mainly because these big institutions are now involved. They mentioned these players held around $70 billion in Bitcoin just before the period they analyzed.
Companies like?
Tesla, MicroStrategy, those are the big well-known examples they cite.
And even with the market dips, that institutional interest didn't just evaporate.
That's a key point the white paper makes. Interest remained. They even mentioned Elon Musk saying Tesla was holding onto its Bitcoin. That kind of thing from established companies, it helps build confidence.
Definitely. What about just regular people? Wider adoption?
That's growing too. The paper estimates that by early 2022, something like 106 million people worldwide owned Bitcoin. That's a significant number, showing broader awareness and acceptance.
And then there are the technical things like the Bitcoin halving. How does the white paper see that affecting things?
Well, halving's basically cut the rate of new Bitcoin creation in half. It's pre-programmed. The idea is less new supply hitting the market should, theoretically, push the price up over time.
And there's a history there.
Yeah, they point out the last halving, May 2020, was followed by significant market growth. And the next one was expected in 2024, so that was definitely on people's radar.
So these built-in mechanics can really shape the market. It's also interesting, given the turbulence in 2022, that investment in the sector was still strong.
Absolutely. The white paper quotes an FT Partners report showing crypto and blockchain startups raised a huge $17.5 billion in 2022.
Oh.
And get this, the number of deals actually went up by 45% compared to 2021. Even in a down market, there was serious investment activity. Shows long-term belief.
And was this just a U.S. thing or more global?
Very global. The U.S. led, sure, but the white paper highlights significant funding going to startups everywhere. Singapore, the UK, India, Canada, across Europe, China. It's a worldwide phenomenon.
So where is the smart money going? What kinds of projects are attracting investors?
It seems like the focus is shifting towards practicality. Projects improving usability, making digital assets safer and easier for regular folks to use. Also, building out the infrastructure for Web3, that idea of a more decentralized internet.
Making it more user-friendly, basically.
Yeah, moving beyond just the tech heads.
Yeah.
And finally, regulation. Always a hot topic. The white paper touches on differing views there.
Oh, yeah.
Big time.
You've got some who worry that more rules will kill innovation and independence, the core crypto ideals.
The anti-establishment view.
Right. But then many others, investors and analysts included, think clear regulations could actually be good for the market.
How so?
They argue it brings transparency, stability, maybe shakes off the association with crime, potentially attracting a whole new wave of more cautious capital. It's a real split in opinion.
Okay, fascinating trends. Now, the crystal ball gazing part, the next 5 years. The white paper includes some forecasts, but acknowledges it's tough.
Yeah.
Extremely tough. Predicting crypto long-term is, well, notoriously difficult. So many external factors can swing things wildly. The white paper is careful about that.
But it does present some viewpoints.
It does. It contrasts the skeptics, those who see downturns as maybe the beginning of the end, with the optimists, experts who look at these dips as potentially great buying opportunities.
And they single out Rick Edelman's view. He sounded pretty enthusiastic.
Very enthusiastic. The white paper quotes him calling crypto an opportunity to create wealth like nothing we have seen in 35 years.
Wow, that's a huge statement. What's his reasoning?
He points to the potential for rapid growth and believes the market kind of cleared out a lot of risky leverage, setting a stronger foundation. He even talks about Bitcoin hitting $100,000 in the short run.
That is bold. And he sees it becoming mainstream.
Absolutely. He predicts crypto will be a standard part of both personal and institutional investment portfolios within 5 years.
Okay, that's the super bullish case. Any more conservative estimates mentioned?
Yeah, the white paper also includes more traditional analysts' views. Maybe Bitcoin hitting $50,000 in 2023, possibly $100,000, but maybe further out, like by 2025. Still, significant growth, just maybe not as explosive.
And the key takeaway seems to be the cyclical nature of it all.
Exactly. The white paper really emphasizes that crypto markets, like stock markets, go through cycles, ups and downs. But historically, crypto has recovered from crashes and gone on to set new highs. That pattern offers hope for long-term holders.
Okay, that gives us the big picture context. Now let's zoom in on Ultima itself. According to their white paper, what's their main goal again?
Right, Ultima. Their core mission is pretty clear.
Yeah.
Become the most widely used global cryptocurrency. They want an accessible, user-friendly ecosystem for everyone.
And the token itself, Ultima.
It's designed with what they call a hyper-deflationary model. The idea is the supply decreases over time, which they believe will help stabilize its value. And a key point they stress is user control. You own your tokens fully.
And they explicitly state they're trying to improve on earlier cryptos, like Bitcoin.
That's definitely part of their story. The white paper argues Ultima learned from the challenges of the first wave, using their own tech to improve things. But interestingly, they say they're not trying to just compete head-on in the existing market. They want to carve out their own niche, their own market, and be leaders there. A bit different.
Okay, so what specific problems with existing crypto does Ultima aim to fix based on the white paper?
They really focus on two main things. First, the crazy price swings, that volatility you see with many coins.
Mm-hmm.
And second, the complexity, making crypto less intimidating and easier to use for people who aren't, super tech savvy.
Let's take the volatility first. How does Ultima plan to tackle that unstable exchange rate?
Their main weapon is that deflationary strategy. Several parts to it. First, a really small fixed total supply, only 100,000 Ultima tokens ever.
That's tiny compared to Bitcoin.
Tiny. Then they do regular token burns, permanently removing tokens from circulation. Plus, they have a halving schedule for distributing new Ultima.
Like Bitcoin's halving.
Similar concept, but their own schedule. It started at 50 coins distributed daily, then it halves roughly every year until it gets down to just one per day by 2028. That happens after every 10 million blocks on their blockchain.
Okay, slowing down new supply significantly. Anything else?
Yes, there's a delegated liquidity pool. It distributes Ultima to people who hold another token called SPIT. The more SPIT you hold, the bigger your share of the Ultima distribution. Kind of like earning dividends.
Right, so multiple ways to try and manage supply and potentially stabilize price. What about the complexity issue, making it easier for non-techies?
They say they put a lot of effort into designing user-friendly products and apps, intuitive interfaces. They also provide detailed guides and offer 2047 support in, I think, 5 languages.
And is it working? Are they attracting new users?
Well, the white paper claims that over half their users are actually new to crypto entirely. So that suggests their focus on simplicity might be hitting the mark.
Interesting. What about the project's history? Where did Ultima come from?
It started back in 2016 in Switzerland. The team apparently had previous experience developing crypto products. According to the white paper, they're now operating in over 120 countries.
And the technology itself has evolved over time.
Seems so. The initial idea was 2016, first blockchain version in 2017, an updated deflationary one in 2018, and then they launched what they call the smart blockchain, which they claim has the latest features.
The white paper also names a founder, Alex Reinhardt.
Yes, Alex Reinhardt, founder of the smart blockchain. The paper paints him as, well, a blockchain innovator, economist, venture capitalist, serial entrepreneur. Quite the background. Over 10 years in startups.
Any recognition mentioned?
Yeah, they list him as one of the top 10 most influential in crypto by the Entrepreneur magazine and in Dubai's top 100 by Arabian Business Journal. Plus, it mentions a large international community supporting him, around 2.8 million people.
Okay, so a visible figure behind it. Now, the white paper talks about something called DeFi-U. What role does that play?
Right. DeFi-U sounds like a key piece. It's described as a platform letting users interact directly with the smart blockchain. Specifically, it's how you earn those Ultima rewards by holding SPLIT tokens.
How does it work, practically?
You register on DeFi-U, then you buy a split license and a split contract. This contract creates the SPLIT tokens for you on the blockchain. And the amount of SPLIT you get determines your share of the Ultima coming out of that decentralized liquidity pool we mentioned.
So buy a contract, get SPLIT, potentially earn Ultima.
That's the gist of it, yeah. More SPLIT means a bigger potential share of the rewards.
And Ultima isn't just the token, right? The white paper describes a whole ecosystem.
Exactly. They're building out a range of connected products and services.
Like what?
Okay, there's the Smart Wallet, their multi-token wallet where you control your keys. There's the Ultima Store Marketplace. Sounds like a platform where the community can buy vouchers for major retailers using Ultima.
Okay, trying to create actual use cases.
Seems so. Then they're developing crowdfunding platforms, one for charity, one for startups, an Ultima Travel Club for discounted travel bookings, and the Ultimex Exchange, planned as their own crypto exchange featuring Ultima trading pairs.
That's quite ambitious, a pretty comprehensive suite of tools around the token. Does the white paper give a timeline for all this? A roadmap?
It does lay out some key milestones. The smart blockchain launch was targeted for March 2023, with initial token trading in Q1 2023.
And further out?
DeFi-U launch and listings on other exchanges were planned for Q3 2023 through 2024. The Ultima halving event and new product releases were slated for Q1 to Q3 2024. Then the marketplace, travel, crowdfunding, the exchange, even NFT projects were aimed for the second half of 2024.
So a phased rollout. Finally, the white paper must acknowledge the general challenges facing any crypto project today, right?
Absolutely. It identifies the big ones: navigating complex regulations globally, the constant threat of hacks, overcoming public distrust or skepticism sometimes, and of course managing market volatility.
And how does Ultima say they're tackling these?
They state they're using legal teams for compliance, focusing heavily on security for their tech, educating users on safety, and relying on that deflationary model to try and bring some price stability. A multi-pronged approach, basically.
Okay, we've definitely covered a lot of ground in this deep dive, from the feel of the crypto market in early 2023, right through to the specifics of Ultima's mission and tech, all based on their white paper.
Indeed. We saw how the market showed some recovery then, explored the pros and cons of crypto for actual payments, and looked at those key trends like institutional adoption and tech updates shaping the space, plus those optimistic, albeit varied, forecasts.
And against that backdrop, we've seen how Ultima positions itself. This ambition to be a global, everyday crypto, tackling volatility and complexity head-on with its deflationary strategy and this expanding ecosystem.
Yeah, what stands out is that focus on trying to move beyond just speculation, attempting to build something practical, user-friendly for real-world financial stuff. That deflationary model and the whole ecosystem plan seem absolutely central to that strategy.
So as we wrap up this deep dive, it really leaves you, the listener, with a question, doesn't it? Beyond all the hype and the price charts, what's the ultimate destiny for cryptocurrencies? Will they stay mainly as volatile investment assets, or can projects like Ultima actually succeed in making that leap to become tools we use every day? The idea of a truly accessible, widely used crypto-changing finance. Well, it's definitely something to think about. Thanks for exploring the depths with us.